So it's December the 14th today. This evening, well, UK time anyway, is the Federal Reserve interest rate announcement, widely expected. In fact, I think it seems like it's almost a nailed-on certainty to rise quarter of a point from half to three quarters of a percent. The markets have been obviously they're forward-looking. They've been pricing this in over the last few weeks, and it'd be a major shock if Yellen didn't hike rates. I mean, I think if she didn't, the market would take that as a very very sort of bearish, worrying turn of events. It'll almost be like an admission that things, and they know that sort of behind the scenes, things aren't quite right, things aren't all that great, and that they feel like they can't get back to some sort of more normalized monetary policy. So I think most people would be shocked if she didn't hike rates this afternoon. So as we said, the markets are forward looking. This is the 10-year US 10-year, as you can see. Really only since October, November, it's had a very, very sharp drop off. I mean, Trump, when he was, part of what he was saying in the run up to the election, and quite rightly so, he's pointed out the real problems now about all this QE and really overly accommodative monetary policy, too much money in the system. The system's been flooded with money, and it's really going to be fascinating to see how his relationship with Janet Yellen sort of develops, or if it develops for very long at all. We don't know, but she's very dovish, and he seems to have a little bit more sense, because what we're seeing now from QE is just, as he pointed out, is that there's no Americans aren't saving. There's no value to be a saver anymore. It's really just made the rich that much richer. If anybody who's just bought some shares in the last sort of 6-7 years or whatever, will have done very well out of it. But obviously your average sort of citizen's not really going to have seen much benefit from QE. They've seen, as I say, their savings decimated, and the purchasing power of their dollar decrease as well. So I think it's quite sensibly said that we need to get back to a more sensible system, and we need to encourage people to save rather than borrow and spend, which is the sort of seems to be the more modern way. People borrow money, they spend it, and a lot of the Western economies have become very reliant on the sort of service sector, whereas I guess back in the day, if you like, it was more about producing things and saving and seeing some sort of value in the bank and a return on interest on your savings. So we're starting to see the markets price in higher rates of interests. This is the if you look, so this blue line here, this is the yield curve for the US bonds. So if you're looking, we're up to just touching 2.5%, which is still cheap, but I think eventually we've got to remember that a lot of this quote unquote recovery, but really a recovery in asset prices or a bubble in asset prices, has been caused by super low interest rates for a long period of time and a huge amount of money being pumped into the economy. And at some point, the thing that's going to pop the bubble will be higher rates of interest. I mean, we're seeing inflation starting to come back in. In the US, the latest inflation reached 1.6%. Over here in the UK, we're up to 1.2%.
Cowen strongly recommending Visa in the 2017. That's V.
Is coming, and with that, is going to come higher rates. So yeah, we'll see.
Amazon
We'll see
CEO
what happens,
Jeff Bezos now
later
tweeting
this
the
evening,
first
but
ever Amazon
I'm
Prime air
convinced
customer
that,
delivery.
that Yellen will hike rates. So back to the S&P, or to the S&P. I mean, I'm looking for a pullback now on this. There's been a real, almost a sort of over exuberance on this rally. A lot of shares been going up on the premise of the whole sort of Trump infrastructure spending, etc., etc. Is he really going to build that wall? Or no, all those sort of shares, along with the banking shares, have really gone up a lot. But I think let's get past the inauguration, and then we'll see. The market has priced in all these things, but we'll see if they all come to fruition. I think in general, it's really, really overbought. I've been tracking it in this sort of channel up here. It's really extended up to reach the top of this channel. Back of Trump, the back of a bit of a Santa rally as well, sort of seasonality. Now, I'm not saying we won't go higher in the future, and I'm convinced we probably will do for another year or two. But I think in the shorter term, I'm looking for some sort of pullback, sort of in this direction, and I'm going to be, I'm going to buy some puts on the S&P this afternoon. So we'll see what happens this evening. I'm almost certain it'll be a 0.25% point hike, and good luck with the trading.